Most people spend years saving money just to buy a house. They think once they have the keys, the hard part is over. But nobody tells you what actually happens after you sign those papers. The real cost of owning a $500 K home is something most buyers never see coming, and by the time they figure it out, it is too late. Let us start with something called the hidden tax of homeownership. When you buy a $500 K house, your mortgage is not your only monthly payment. You are also paying property taxes, and in most states, that number is brutal. On a $500 K home, property taxes alone can run between $5,000 and $10,000 every single year. That is an extra $400 to $800 leaving your pocket every month on top of your mortgage. Most first-time buyers never calculate this into their budget. They look at the mortgage number and say, yes, I can afford that. Then the tax bill arrives and suddenly the math looks completely different. Now here is where it gets even more interesting. Your home is not a static thing sitting still in value. Local governments reassess properties regularly, sometimes every year. So if your neighborhood gets popular or a new development moves in nearby, your property taxes go up automatically. You did not ask for it, you did not vote for it, it just happens. And you are legally required to pay it or risk losing your home entirely. This is the part that makes so many homeowners feel trapped inside a system they never fully understood. Let us talk about maintenance, because this is where dreams really start to crack. Financial experts have a rule called the 1% rule. Every year, you should budget 1% of your home's value just for repairs and upkeep. On a $500 K house, that is $5,000 per year minimum. But here is what they do not tell you. That number assumes everything goes smoothly. One bad roof is between $10,000 and $20,000. A foundation problem can run $30,000 or more. HVAC system replacement costs around $10,000 to $15,000. A single plumbing emergency can destroy your emergency fund overnight. These are not rare events. These are things that happen to normal houses on normal streets in normal neighborhoods. The question is never if these things will happen. The question is always just when. There is also something called opportunity cost, and almost nobody talks about it in real estate conversations. When you put $100,000 down on a $500 K house, that money is now locked up. It is not growing in the stock market. It is not generating passive income. It is sitting in bricks and walls and a lawn you have to mow every weekend. Historically, the stock market returns around 7 to 10% annually after inflation. Real estate in most markets returns closer to 1 to 3% in real terms. So the money you tied up in your down payment could have been working much harder somewhere else. This does not mean buying a home is wrong. It means you need to understand the full picture before you commit. Subscribe if you want more content like this, because what comes next surprises almost everyone. Now let us get into the insurance trap. Homeowners insurance on a $500 K property is not cheap. You are looking at $1,500 to $3,000 per year on average. But that number can spike dramatically depending on where you live. If you are in a flood zone, add flood insurance, which can be another $1,000 to $4,000 annually. If you are in a fire-prone area, some insurers are refusing to cover homes entirely. In parts of California, homeowners have been dropped by their insurance companies with almost no warning. Without insurance, your mortgage lender can force place coverage on you at rates that are 2 to 3 times higher than normal. And if something catastrophic happens without coverage, you lose everything. The house, the equity, every dollar you ever put in. Here is a concept called the illusion of equity. People love saying their house is their biggest asset. And yes, on paper, if you bought a $500 K home and it is now worth $600,000, you made $100,000. But did you really? Think about what you spent over those years. Mortgage interest alone on a $500 K loan over 30 years at a 6% rate is over $580,000 in interest payments. You literally pay for the house twice just in interest. Add in property taxes, maintenance, insurance, and upgrades you made along the way, and your real profit shrinks dramatically. Sometimes it disappears entirely. The home you thought made you rich actually just kept you even, while making the bank very wealthy. Let us talk about selling costs, because this one genuinely shocks people. When you decide to sell your $500K home, you do not just hand over the keys and walk away with your equity. Real estate agent commissions typically run around 5 to 6% of the sale price. On a $500 home, that is $25,000 to $30,000 gone immediately. Then add closing costs, any repairs needed before listing, staging expenses, and potential buyer concessions. You could easily lose $40,000 to $50,000 just in the process of selling. So that equity you built up over years can vanish faster than you expect when you finally try to access it. There is also the psychological cost that nobody ever puts a number on. Home ownership comes with a mental load that is genuinely heavy. You are always thinking about what needs to be fixed. You are stressed when a storm rolls through your area. You are anxious every time an unusual sound comes from the walls or the basement. You cannot just call your landlord anymore. Every problem is your problem. Every decision falls on you. That constant low-level stress adds up over months and years into something that affects your health, your relationships, and your happiness in ways that are very real but almost impossible to measure in dollars. Now watch until the end because there is a smarter way to look at all of this. The people who come out ahead with real estate are not the ones who blindly bought because everyone said it was a good idea. They are the ones who understood the full cost before they committed. They bought in markets with stable or growing demand. They kept their maintenance reserves fully funded. They chose homes where the total monthly cost, including taxes and insurance, was still below 30% of their income. They did not stretch to the maximum limit their bank approved. Banks approve you based on what you can technically afford on paper. They do not care about your retirement savings or your kids' education fund or your peace of mind. The $500K house problem is really a thinking problem. It is about the gap between what buying a home feels like and what it actually costs over time. It feels like security. It feels like success. It feels like you finally made it. And emotionally, that feeling is powerful and real. But feelings do not pay property taxes. Feelings do not replace your water heater. Feelings do not cover the $30,000 you lose in commissions when life changes and you need to move. Smart buyers go in with their eyes completely open. They run the real numbers, not just the mortgage payment. They build a maintenance fund before they even close on the house. They understand that a home is a place to live first and an investment second. The moment you flip that order is the moment the house starts owning you instead of the other way around. There is also a massive difference between house rich and cash poor. Millions of Americans are sitting on homes worth hundreds of thousands of dollars while struggling to cover everyday expenses. Their wealth is trapped in an illiquid asset they cannot access without selling or borrowing against it. A home equity loan sounds appealing until you realize you are borrowing against the place you sleep at night. If you lose your job and cannot make those payments, the bank takes everything. So the equity that felt like safety becomes the source of your biggest fear. Real financial freedom looks like having choices. It looks like being able to move for a job opportunity without being anchored to a house you cannot sell quickly. It looks like having liquid savings that can actually help you in an emergency instead of equity you cannot touch. It looks like sleeping at night without calculating whether the strange noise from the roof means a $500 repair or a $15,000 one. None of this means you should never buy a home. Home ownership at the right time in the right market with the right financial foundation is still one of the most powerful ways to build long-term stability. But you have to go in knowing what you are actually signing up for. The $500K house is not just a house. It is a decades-long financial commitment with costs that keep showing up whether you plan for them or not. The people who win at real estate are not luckier than everyone else. They just did the math the right way before they signed anything. And that is the only thing separating a home that builds your life from one that slowly drains it.